I've never actually told people my thought process as I invest, and I've never actually gone deeper into this. This time and today, I will. So, why invest money? For many years of my life, and I know this is going to sound crazy, I have actually just let a big chunk of my money lie in my savings account. For the first 3 or 4 years of my career, I actually just did. Especially when I was freelancing, I was so focused on freelancing and so focused on doing that well that I said, I don't need to worry about what happens to the money sitting in the bank account. I can just make more money. And even today, I believe that, but I believe in also investing. I believe it's not mutually exclusive. But that time I had to focus, I had to get better at the skill. I didn't have too much free time on my hands, and to be honest, there weren't finance influencers back then to influence me to save. Now, the main reason to convert money sitting in your savings account into some asset is because over the long run, your wealth keeps getting eroded. Every year, thanks to inflation, your money is worth lesser and lesser and lesser. Over the last decade, I've also learned that creating wealth is not just about making money, it's also about saving and preserving that wealth. So without much further ado, this is how I invest my money. Now, number one, and this is going to be super controversial advice, I actually leave a decent chunk of my money in fixed deposits. Now, I know what you're thinking, You might say, fixed deposits, Varun, they're stupid, they don't work, they have such a low rate of return. You're insane. Sure, but you guys have only seen a bull run for the last 2 years. Remember, I've been around for almost a decade, more than that in fact. And I've seen my share of bull and bear runs. And in times like that, especially in times of a recession, instead of just leaving your money in hard, cold cash, it is better to put that money in an FD. Secondly, and this is a nuance of how I save my money, you might be comparing the stock market or any other asset with the FD. I'm comparing the FD to just leaving that money in my savings account. Right? The FD is almost always better. Now, I know there might be some 18, 19-year-old traders who are going to talk about how they made 30% or 40% actually sitting down and day trading. Let me tell you one thing. In a bull run, everyone looks like a genius. You could make 3 bad moves or 10 bad moves and still end up making more money than usual because the stock market is just irrational. Less than 1% of traders will make more than bank FDs. This is a quote from Nikhil Kamath, who runs Zerodha, which is one of the largest exchanges in India. Now, these days, I just clear up any money that's sitting in my savings account, just put it in an FD or park it into an FD quickly, mainly because any excess cash that I have, I will end up spending, obviously. Secondly, I might not always have time. Because I'm CEO and I run a business that is wildly profitable, I should be focusing my time and energy there and on YouTube where I'm building distribution. In between these two and the number of people involved in both these enterprises, it gets hard for me to immediately pick what stock I want to put money in. Because of this lack of time, FDs, which provide a better return, and the fact that free cash will erode at a much higher rate than FDs, I always clear them and put them into FDs. Even though a lot of people believe this is not good advice, it is good advice for me, and I've seen it work well over the last few years, except maybe in the last 1 or 2 years when there's been a bull run, where obviously the other assets are better, and I will also tell you how I invest in the other assets. So it's not that if I do FDs, I do only FDs. I have a diversified portfolio. I put money in FDs and I also put money in other assets. Now you're right. For a long-term investor like me, in a good market, FDs have not that great return. So what I do in good markets is to try and shift money out of the FDs. That's why I have low terms. I try to shift that money over to the stock market. And the way I do it is not to invest directly. I do not have the time on a daily basis to be able to open my portfolio and see how much has gone up, how much has gone down, redistribute that money. I'm not that kind of person, right? I prefer to build things that people love and make money when they love that thing and pay me for it. So what I do is I actually invest through small case. I think less like a trader and more like a long-term investor. I try to diversify my inputs and hope that one of the outcomes does well, if not multiple. If you've read the book Psychology of Money, you'll realize that even though in instances when markets crash, you might be bleeding and seeing red, if you take a very long-term horizon, these are small instances. But if you have paper hands and you sell as soon as you think the market's crashing and then you rebuy, you're just wasting your time and also eroding wealth. However, if you play for the long term, if you truly believed in the fundamentals of the business and the fact that the internet will one day boom, then it's easier for you to stay with your money inside. I believe it's a feature, not a bug, that I don't sit and open my portfolio 1,000 times a day and try to rejig what my portfolio is. I'm more likely to buy near-term stocks rather than something I believe in the long term. So the way I invest is that most of my investments are made through small case. I diversify into stock, debt, and gold portfolios. The instrument I use is small cases all-weather investing. It's a great instrument for me personally, and it's an instrument with the least risk and still reasonably high rewards. It performs great in all markets. Crash or no crash, AWI has you sorted. And I like the fact that there are some people who are there at the moment, even though I could be busy and not have the time to reshuffle my portfolio, there are people there who are dedicated to make sure I don't lose money. Right? They're trying their best to make sure, hey, this is crashing, maybe we should shift it around. Maybe there's a macroeconomic trend that just makes gold useless tomorrow. There are people that will see that data and move this around. Long term, the product generates equity-like returns for me while dramatically reducing volatility. It sort of has been a smooth wealth generation journey. More importantly, small case offers instant liquidity, unlike FDs, which means that I can invest and redeem my money almost instantaneously. I also started with small case fairly cheap. It was much less expensive than alternatives, and I began AWI at a very low ticket, and over the months and years grew confidence in its offering. Only then did I start shoving in more and more and more money. Small case has created an incredible algorithm that actually intelligently allocates funds to stocks, gold, and other assets. It's been through its battles, ups and downs, and I kind of trust it at this point, which is why I'm just going to leave my money there. Now, as always, do your own research. In this video, I want to talk about how I invest my money. But do your own research before you use any product and make sure you've put some thought into where you're parking your capital. So finally, a little less than 10% of my asset pool is crypto. Now, I know what that looks like. It's like, hey Varun, you've done very safe, you've done safe, and then you've done the crazy, right? Like crypto, for a long time, I didn't even invest in like Bitcoin or Ethereum, even though I have exposure to both. I was just all over the place, right? I was like, I'll try this NFT, I'll do this crazy project, I'll see how this goes. But over the years, I've learned that crypto hasn't been around for that long. At least bull run of crypto hasn't been along for that long. I've been investing in crypto since 2014. And at this point, I just have an SIP in Bitcoin and Ethereum. I invest a little bit every month, and I just believe in the long-term fundamentals. It's the same thing I told you with regards to Amazon, right? Like if you truly believe in the fundamentals of something and are willing to wait a very long time, then you should by all means just keep putting your money there and not look at it again. This is how I do it. You should not do it. This is obviously the riskiest asset class. That's why all my money is not in there. Like for some reason, kids these days are like, either all your money goes there or all your money goes there. You guys don't have that ability to say, okay, I will do a little bit of each. It's crazy times, but that's going to change soon. Now, the reason I invested in a lot of NFTs, especially early on, is to find out what that market's like, to find out if there are technological advancements there, to find out, am I missing something? A little bit of FOMO as well. But at this point, I realized that at least in the early days, there were some good projects. Today, it's like mostly crap. I just stay with the top 2 coins. Maybe I will move exposure to top 3 or 4 coins soon. Maybe I'm light at this point on the belief in utility of crypto, but I do see their value as a payment processor and a value as a hedge to the dollar. So I will continue to stay invested for very different reasons than other people invest in crypto, which is to make 1000x their money. I know this is going to sound strange, but that's about it. I will have some real estate exposure soon, but I guess, it's not something that I'm going to be buying to be selling. It's a house. Like I want to make sure I have a house so that I can stay there for a long time. I'm always long term on these things. Where I think shorter term is my approach to projects, my approach to actually building cool stuff. But with finances, I think longer term. That's it for me. Bye.